And good afternoon. Welcome into another edition of Market Talk for Monday, March 8th. I'm your host, Jesse Allen. Great to have you here with us. A good afternoon once again. Find us online, markettalkag.com, Facebook, Twitter, Instagram. It is all at Market Talk Ag as well. Find our great radio affiliates via our website and all of our streaming platforms that we are on, including iHeartRadio, Spotify, Apple Podcasts, and so many more. It's all online at markettalkag.com. Well, we kicked off a pretty big week here in the ag markets as we have more USDA reports out tomorrow. Grain trade today was started strong, finished maybe with a little bit of a whimper, but not a bad day overall. Let's bring in our good friend, Senior Market Advisor with Total Farm Marketing, Bryan Doherty, is our guest here on this Monday. Bryan, good afternoon to you, sir. And crazy to think we are already into week 2 here for the month of March.
Yes, sir. Good afternoon, Jesse. Yeah, March 8th, believe it or not. Gosh, 3, 4, 5, 6, 7 weeks away from, tractors running wide open, fields being worked, planters running. Yeah, pretty incredible stuff. Yeah, it's moving right along. Big day tomorrow, USDA report. Traditionally not a huge report, Jesse, to, shake the grain markets, but everything's a little more huge this year. So we'll see if there's any surprises tomorrow. The market's not looking for much. The average pre-report estimate for corn ending stocks is 1.460 billion. And in February, the report was 1.502. So a slight reduction expected.
And I think, you mentioned some of those maybe slight reductions on the U.S. Balance sheets. I think more traders are maybe keen on what USDA does with South American numbers. We're hearing more and more about weather issues down there. And what was the report I saw today? Soybeans currently 35% of Brazil's soy harvest is complete and 54% of safrinha corn is planted, and more dry weather in the forecast for Argentina, more rain in parts of Brazil. That South American weather story is really kind of starting to take center stage, it seems, Bryan.
It has, and you've got new crop highs prices in corn and soybeans last week and carried through on the overnight trade. So you got some fight for acres there. But you're right. The USDA will probably, most analysts, I believe, and I guess I'm going to fall on that camp, think that they may kick the can down the road one more month to get a better view of just what it looks like in South America. Expectations are that over the next month, you'll probably see downgrades to the Brazilian bean and corn crop. I'm sorry, Argentine corn and bean crop because of dry weather. Brazil will have a record amount of beans, it looks like, but not a record yield. Too many pesky dry problems early on and problems throughout the growing season. Now too wet. Harvest is still, from what I understand today, still at a 10-year low for its pace at this time. Corn planting behind schedule. That just pushes everything back, creates a little more uncertainty down the road. And in part why our corn prices just continue to tread water or try and move higher for old crop. New crop, though, trying to battle it out with beans, it looks like.
Yeah, and looking at some of those numbers here today, you mentioned we tested some of those new crop contract highs in the overnight. I know soybeans kind of faltered late, ended up finishing just moderately higher, at least in the old crop. You look out to new crop, November today, up 12.54 and a quarter, but that was definitely off the high. What do you make of today's action? Did we have some funds step into the market, do some buying here, or what happened, Bryan?
Well, on the overnight, you had a surge in energy prices due to some type of a military action between Iran and Saudi Arabia, an airstrike, and energy prices spiked, and I think that just pulled everything with it. Plus, the forecast basically said little to no rain in Argentina, maybe until the weekend. Looked like those forecasts beefed it up a little bit on the rain late in the session. And maybe a little sooner, maybe by Friday. Same thing when you have these bull markets. If you don't have like market shock, let's say what's called market shocks, which shock the market, you get positive news, it runs up and it kind of runs out of buyers and then sellers jump on it real quick, it looks like. And we've seen that kind of repeatedly in corn and soybeans, but new contract highs in old crop beans. So, yeah, the bulls have to be disappointed that when you look at where, as an example, May beans finished today, let's just call it 1434, and the high was, 1434 and high 1460. That's a long way from the high. It's 24 cents, but put it all in relative perspective. These aren't $9 beans either. Nonetheless, a disappointing close for sure for the bulls. Wheat was really positive, turned negative. But I think the big story is just when you look at the drought monitor map, and we continue here to talk in the U.S., guys are getting a little more edgy and concerned. What it means is you're not getting farmers saying, hey, I think this looks really good for us. Let's go ahead and hedge some corn or sell some corn. They're holding off selling in the Western Corn Belt.
And that's a great point you make there, is that drought monitor map continues to grow in the Western Corn Belt, pretty much from, the Southern Plains portion all the way up to the Dakotas, up to the Canadian border. It just seems like that drought monitor keeps extending, and that has to be, I would agree, a worry going into the spring planting season. We're only a couple of weeks away from that. That if we don't get some moisture in here for spring and we start out dry and stay dry for a while, I definitely think that's going to be a shock to the system here for our prices, and that could push things even higher with weather concerns, Brian.
Yeah, it's one of those things that can happen any year. But so far, and it's early, but moving into the growing or planting season, this monitor map hasn't changed in 5 months. The western states stay dry. It permeates a little bit further northeast into Minnesota and Wisconsin, stretched through central northeastern Illinois into Indiana, into Michigan, the little finger of it showing up there. So that's the one thing you're starting to hear from farmers right now. Now, you got two splits, or a split of two. And one is the farmer that says, hey, it's March 8th. Don't even bring it to my attention. Plant in the dust, the bins will bust. We got a lot of time to get timely rains and recoup our moisture. Others, they're getting more concerned. They're saying, look, we're dry. When they say we, and then they put the emphasis on the word dry, they're talking about prolonged dry weather, tiling not running, those type of things that we saw in we saw it in 88, but in 2012, we saw the same thing where you went into spring dry. The market doesn't react to it right away. And eventually it's like a rubber band snapping. All of a sudden, you just don't have enough moisture and timely rains, and off to the races the market goes.
Looking over on the corn side here, just shifting away from weather, just looking at today's closes in corn, a fairly mixed bag. Seemed like we kind of traded both sides of unchanged. I know there's some rumors of maybe an export sale out there. Had some higher prices in China again. Looking ahead to that WASDE report tomorrow, I know is another thing as well. Another point that I found interesting as well, and maybe didn't factor into the markets today, but I noticed USDA adjusted the previous week's corn inspections up by more than 16 million to 80.6 million. It's the highest weekly total in like the last 25 years. I mean, looking at some of those numbers, I would have to think all of that is very bullish and very supportive for this corn market, Brian.
It's not negative. Let's put it that way, right? And they say you need to feed the bull, and that's the thing. The corn is a little bit of a challenge in front of it because it's got a very robust 2.6 billion bushels of export and expectations, and we're a long ways from that. I think we're only about 40% of that number on the inspections. Don't quote me on that one. Unlike beans are in that 85, I think it's 87, 83%, I believe, somewhere in that mid 80s of expected sales already inspected on ships and gone. And there's quite a few months left in the marketing year. It ends August 30th. So you figure you've got most of March, and then April, May, June, July, August, September, or August. So you got 6 months, basically. Not a lot of room for error there. And the USDA tomorrow is expected to show carry out a little bit lower, 117 million bushels versus 120 last month. No matter how you slice it, it's very tight. I don't know if I shared this with you last week, but you just figure that carry out so low if you took it by the number of states and counties by states. There's just, a lot of empty bins sitting around by the end of the year. I figured at 50 counties per state, 50 states, 120 million bushels of carry out. You've got one bin in each county with 50,000 bushels at the end of the marketing year.
Wow.
So it's a pretty tight supply. Yeah.
That is a very, very tight supply. And, we talk about all these factors and we look at the reports tomorrow and just looking out in the crystal ball here the next couple of weeks. I would have to think if I'm a producer with the dryness concerns coming into the Western Corn Belt, but also, looking at some of these numbers, still good price levels here, new crop prices. I mean, we hit on this every week, but if I'm a producer and I feel like if I don't have some sort of marketing plan in place or maybe have a floor underneath me, it seems a little foolish right now. At least maybe leave some room for some ownership over the top or something to that effect, Brian. That just seems like that would be the smart move right now.
It is the smart move. Keep assessing the risk. The higher the market goes, if you've been not selling, that's been a risk that's paid for you, but at some point that might snake bite you. But I think the big thing too that farmers can really think about doing as they make sales on the way up or push sales into this, just feel good about selling to a rally, feel good about rewarding demand that wants your corn right now. We've had a lot of tough years with just, really challenging prices, and just keep moving them along. I guess what I'm saying is don't get greedy at this point. Don't do that. Recognize that the higher you are in price, the higher it is to sustain rallies. We saw that today again.
Mm-hmm.
But we got some very exciting things in agriculture. Take a few minutes and really, dust off those books if you got them, or manuals, or open up your computer and, just be really focused on you as an inventory manager and what you can do and what questions you should ask. And that'll go a long way in helping you decide how you want to handle where the market is today, where it'll be if the market goes up or if the market goes down. You want to pre-plan all of this.
Bryan Doherty, our guest today with Total Farm Marketing here on Market Talk. And Brian, let's move over to livestock. On the hog side of the equation, we started a little lackluster today. We ended up finishing with decent strength, and I feel like this hog market's just trying to find that support here with a little bit of the indecisiveness we've seen lately and a little bit of the unsureness right now. What are you seeing in this hog complex here after today? Are you happy with the move here late for a decent close?
I am. You look at, in particular, we're creeping up on them sooner than later, but on these summer months, in particular, June closed 55 higher today, 95, 97. But that's a creep higher now with 4 consecutive firmer closes. We're real close, or we made a new contract high close today. But you've got a real nice uptrend. You've got things not blowing people out, or the market screaming so high you can't hardly handle it, giving producers good opportunities to run stops under the market. We were in a phenomenal environment. You got a COVID, you had energy wars this last year, you've had African swine fever, you've had it seems like everything but the kitchen sink thrown at a lot of these markets, yet we're at good prices like hogs are. And so now's not the time to kind of let off the gas and rest in the laurels of the rally the last 3 months. That could disappear in a hurry. Make sure and keep a sharp pencil. Buy some puts in this market, especially for summer months.
Mm-hmm. Yeah, I think that's great advice there, especially those summer months, like you mentioned. Really, I'm impressed with those price levels and where they've been at lately. Flip side on the cattle, the story there, I think this week is feedlot country. Will we break out of the sideways trade that we've seen for cash here lately? I think that's what everyone's watching. Decent close on futures today, but really, I think it seems like that story could be told here later in the week as we start to get more feedlot activity happening out in the countryside. Brian, what do you think?
Well, you got your best close today in 6 sessions, so that's good. Market's got a little more confidence that the swing lower may be running out of gas. You step back, and now it starts to look like a bigger consolidation picture in the market marking time. We had excellent weight gain in the months of November, December, and January. February was a little more rough, and so far March has its pros and its cons. But overall, good enough inventory, not enough recovery in the restaurant business and schools and all of this through at least February now into March to really get the bull run going in cattle. But I think if you step back and look at it, we've had some pullback. This market should be well supported. And in case it's not, buy a put. But otherwise, look for the April, look for the June, look for the October contract, August, October. Look for all of those to gain ground and make up some ground, but lift in the new highs yet.
And I think that'll be something we'll be curious to see. But I'm with you. I'm definitely happy with the way the close was today in cattle. And the thing too is, I mean, you mentioned COVID and that restaurant demand still not really back to where it was, but we are seeing improvements there for both cattle and hogs with vaccines coming online and more things slowly starting to open up. And I would think that has to be supportive to both cattle and hogs as we move into the summer grilling season and beyond.
Yeah, in theory, there's a lot of pent up money out there that's been on the sidelines, and it's ready to go out and do things and grill things and see things and buy hamburgers. So the general expectation is that as each month goes by here, and I think what it'll be more than anything is sort of a feel, because as people kind of get outdoors and do their things, they're going to watch the news less and stop seeing Dr. Fauci 8 times a day, and people are just getting. I want to say there's kind of a couple of groups. I think one, people are just sick of it. They just want to go out and do stuff, and they're respectful of how dangerous this COVID could be. On the other hand, we probably all know of a number of people that kind of had it and it disappeared pretty quick. So it's not a judgment call. It's just is it really that life-threatening risk for a 30-year-old or 25-year-old who wants to go out with their buddies and get hamburgers and go to the game? No, people are going to get back and they're going to start spending some of this money they haven't spent, and it's looking to me very positive on that front, both from the vaccine and also from the flattening and lowering the curve just on the herd immunity.
Bryan, any thoughts on the dairy market here as we start the new week?
Yeah, what's interesting there is we've been really sort of vacillating back and forth on the pros and cons of the dairy and increased production and whatnot, and yet through this all the last 3 weeks, all of a sudden the dairy market's really gotten some high hopes that all of a sudden this demand's going to come back in, and we saw that through world global dairy trade. Interesting, the big winner there was powder milk, and kind of dust off the old books on, well, what's powder milk? Why so much? Well, China was a big buyer. Sure, they could be using powder milk, or there was a lot of scuttlebutt that putting some of this powder, high protein, into their feed rations for livestock, particularly hogs. So you've got this going into hog feed to help supplement soybean or lack of soybean meal. Interesting scenarios that just shows you how strong demand is over in China for grain products and beans and bean meal and bean oil, which reminds me, bean oil rallied into new highs here. Really strong world vegetable oil prices. So the dairy market's participating is my point. It's, we're seeing $18 plus milk. I had my doubts whether we could get back to that. Here we are. We've got it in the May, June, July, August, September, October contracts, November 2, 1819, then December 1789. But you could start looking out to that third and fourth quarter and averaging $18. It's time to get some milk sold. Production will be there.
Definitely. Very, very true. Bryan, always great insight. Any final thoughts here as we wrap up Monday's trade and look ahead to tomorrow's USDA numbers?
You and I spent a lot of time talking about things that could move the market and variables that can move the market. What a listener should do is say, that's all great. That's cool. They're talking stuff. They're talking my language. I get it. But their next question should be, now, what do I do with it? So my advice is to really get strategic before you get in the field. Have some scenarios laid out. If corn hits certain levels, I'm going to be certain amount sold. If it starts to sell off, how do I trigger into some sales or put purchases or something like that? But get strategic, have serious conversations with your advisor, have serious conversations with your loan officer if you want to enter into some type of hedges and things that are very viable. Make sure and ask critical questions of your cash merchandiser. They want to do some sort of synthetic option, this, that, the other thing wrapped up into a cash contract. Make sure you understand all the ins and outs of that. Really important stuff.
Well, Brian, if they need a little advice from someone like you and the team at Total Farm Marketing as they're putting together their plans before they head into the tractor in the field here, how can they get a hold of you?
We'd love a phone call, 800-334-9779. Again, that's 800-334-9779. Visit our website. You can email us. The website's a really good source of ways to contact us. If you want to connect with me personally, ask for extension 300 or just ask for Bryan Doherty. We got a couple Bryans here, so.
Well, on that website, totalfarmmarketing.com. And as Brian mentioned, a great resource. That's totalfarmmarketing.com. Brian, as always, appreciate time here on this Monday and have a great rest of the week. We'll talk to you next Monday.
Jesse, thank you. My pleasure.
Bryan Doherty with Total Farm Marketing by Stuart Peterson, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, March 8th edition of the show. I'm your host, Jesse Allen, wishing you a great afternoon.